All right, stock market analysis and projections on the S&P 500. Please do read this slide. It gives you the important information about our approach to the analysis, and I really want you to read this. All right, stock market analysis, S&P 500, and we're going to look at the NASDAQ and the FEZ. The market is roaring on the upside right now. Now, in the last couple of weeks, we have talked about a pullback, and the market was looking very much like it was pulling back, and we've seen that going on in the Russell and as it was supposed to in that time frame, and the FEZ stocks 50 as it was supposed to in that time frame. But things really got messed up based on the downside that we were looking for by this move into AI, and it has really pushed up the S&P 500 and especially the NASDAQ. So the NASDAQ has led that way up, and it's really giving us some sense that the downside targets, which we had upgraded twice, we may need to do that again because it's going to be pretty tough to get a lot of downside in this market. And this is maybe a time that the worst case would be just some churning and sideways digestion before the market does move up to our target of 4,300 to 4,360 on the S&P 500. We expect that into the summer. And let's just look at these charts and we'll talk about what's going on. First thing that I want to look at here is the S&P 500. This is the SPY. Let's just go back over here and you can see the cycle rhythms that are in there. This green dash right over there is the FEZ and the RUT. We were looking for them to come down and bottom here, and I'll show you in just a moment that I think that has happened in the FEZ, and that's ready to start to move up, the European stocks. Look at this week right over here, this kind of hanging man here, and we're back up in this resistance area. Now, there is a possibility that the next week or two will get a pullback in here still, aligned with this minor cycle in here. But we had looked for originally for it to get down to 4,000, and then we said we're upgrading that to about that would be 400 or 4,000 on the S&P 500. This is 405, 406 on the SPY, or 450 to 460 on the S&P 500. So this could still happen in here, but you can really see that it really wants to get a lot of support in this area. So we have to look at the possibility that this low right over here around 409-ish may be the worst case in here, even if it does pull back, because then we're looking for this next move to the upside in here. And this is 430, which is our target for the year. And we think that's going to happen out here in the summer. This has been very bullish. You can see in here the reversal scout has refused to give any kind of a downturn in here, and it probably won't, and it'll continue to be strong as the market rallies in here. So huge amount of buying coming in the market right now as there's a celebration of the potential of the debt ceiling problem getting solved, and so they're celebrating that right now, and the money moving really strongly into the tech stocks, with the SPY or the S&P 500 benefiting strongly from that, especially out of course, the Microsoft and Apple, which are the heaviest weights in here. So a lot of strength in here. We've been overall very bullish with just looking at minor pullbacks that are not happening because the upward momentum is so strong. I'm going to show you momentum conditions in just a moment and what that is, what's really pushing this market to the upside. So look, we were looking for downside correction. Remember, the last 2 weeks we showed you daily charts. This is a weekly chart. So we mix it up. If you want to get all the information weekly and daily, you really need to be a premium member to get all of that. We don't put that all out for free here on these weekend market week shows because we need you to become a subscriber. We want you to, and we know you'll benefit from it. So this is the weekly chart. Very strong potential for some pullback in here, but we think, as we said earlier in the show, that the overall market rotation that's coming is probably going to be where there's some flow back out of these overbought AI stocks and into the broader market, into old economy stocks. And that will just cause some gyration right in here potentially, and then the market moving up. So that's a look at SPY looking over the next 1, 2, 3 months. And then you can see out over here is where the risks pick up again, out in late summer and early fall. In the meantime, we don't think the market has much risk on the downside. Let's look at the NASDAQ, which has just been driving this market up in a huge way. The NASDAQ has gotten up now to a very key level. This is the 100% extension, the top of that blue zone right over there, off of this last cycle. This is the major 61.8% off of the bear market. So this is really a very key area. It has very quickly gotten through our upside projection of 13.6. We were bullish, and the now has moved up to what we consider to be pretty extreme levels. So this right over here again is our reversal scout. This shows you the momentum in here, and it is quite strong. And this area right in here is a pretty good resistance area. I would not be surprised to see this stop. Now, you can see in here the minor cycle right there. This is that. This is the FEZ and the Russell, which I'm going to show you in a moment. I think the FEZ has bottomed. This is just a right spot for this to stall and for other parts of the market to take over. And this decline right over here syncs with the daily cycle in the first week of July. So I think we're going to get this rotation in here where I showed you the S&P 500 may get a little bit of a pullback, but overall it really looks much too strong for that. Where this then does have a somewhat of a correction or weaker than the rest of the market out into this period into late June and early July, and then this move up again towards this area, pretty reasonable now to target about 14.3 as a pretty tough spot for it, but it's moving up so quickly and it's so strong it could even get through there. Next resistances, well, I don't even have them in there that you can see. I have them on the monthly charts. So we'll be putting that in if it got over 14,300, a pretty key area for the S&P 500. Let's look at that Stocks 50, the FEZ, because I think it's very important to this analysis. And you can see in here that what we were looking for, and here's that pullback that what we were looking for, and we thought it would get down to that support area, and we said this is a very super powerful pattern that we're looking at in here. This really looks like the important bottom we were looking at. Look at the minor cycle down over here. You can see that there and right over here and right over here where they both came down together. When you get this right over here, what we call the period of risk or the yellow zone, that has only a few weeks left to go and it just comes down and touches the upper support right there and momentum remains strong, that tells you that the probability is that it's going to be moving up sharply again. This looks like it'll be getting up over here close to 49.5 or 50 out into the summertime. And maybe even above that. So this is the Spider Euro Stocks 50 FEZ weekly cycle analysis. It's been just absolutely great. You can see coming back in here what the rhythms look like in these cyclical patterns. They're exquisite, and it says to me that these stocks are ready to move on the upside pretty strongly. And if we're looking at that, you can pretty much guess that there's not much chance that the U.S. stock market is going to be going down under these conditions. A little further discussion about these indexes is that the Russell is in a bottoming phase, and it's trying to make a low in here, but it does remain relatively weak, and we're looking for that to be making a low right in here pretty soon. So it will also benefit from money when money stops going into the AI and they start looking for things that are value again, and that might be the banks that are very beaten up. They could be stocks that are going to be moving up also. So we're looking for a rotation, some choppy action in here right now. but everything that we're looking at really on the cyclical patterns looks positive. Now, if I look at things as far as the conditions of the market goes, this is the askSlim condition monitor, the MCM, and you can actually get this right now for free if you become a level 4 member. And this is the last weekend for that. So I'll show you that in a moment if you didn't see it earlier in the show. What we're looking at right over here is that are the conditions in the market for the short term. We have this toggled on short term right over here. If I go to intermediate term, that will be different. So this is the style of trader that you are. Essentially, we're in that trader version. So if I look right over here, you can see that for the short term conditions that we're looking at, the S&P 500 is really still neutral. The QQQ is very bullish, and we have seen that. And the IWM and the DIA are neutral and bearish. So you can see in here that this is really all about the NASDAQ going on. And we're going to look to the MCM to tell us when that rotation starts, because it will pick up those changes in there, especially in the shorter term or near term. If I look at the intermediate right over here, you can see for the intermediate holders, they're really all, except for the Dow, which has been negative, pretty good. I mean, of course, the SPY is very bullish, the QQQ is bullish, and it's only because of that monthly chart that didn't quite turn up yet. The IWM is slightly bullish. Now that shows you the bottoming in there, and the DIA is slightly bearish. So those are some a good look at that. I'm just going to go into the individual symbols in here, and you can see in here as we look at this, looking at these different time frames there for the SPY, which the monthly, the weekly, and the daily shows you conditions that are pretty bullish looking at that for the SPY, which we really focused on. If I look at the QQQ, you can see only the monthly is holding it from being very bullish, because that monthly pattern is still pointing to the downside because of the extent of the decline it had. IWM here, you can see monthly and weekly slim ribbons are negative still, so that has got it as slightly bullish. And if I switch over here to the Dow, you can see that the Dow as the weekly reversal scout and the daily indications there are still negative. So the Dow still really struggling. I really believe that those things will be switching, and we'll be able to see that using the market condition monitor as the money starts to flow back out of these very extended AI stocks and into other segments. The FEZ, boy, that looks like a layup to me. That is in a bottoming phase and will be moving up pretty strongly in the summer. And I think that's got a very good message for the still very positive conditions in the U.S. stock market, other than some pretty likely pullbacks, gyrations, back and fill, any way that you want to put it, range trading. That's probably how it's going to consolidate in an overall very, very solid uptrend for the overall market.